They're coming up. No whammies, no whammies, no whammies.
No whammies. That's hilarious.
Just waiting for YouTube, and we're good. All right, guys. Hey, it's Robert here with Mr. Texas Real Estate. Thanks for tuning in here. I got my good friend Donnei Gothard here. Donnei, you are a mortgage and a loan specialist. Mm-hmm. Been doing it for the better part of your life?
20 plus years.
That's pretty good. And, you know, you're a sponsor of ours for our meetups, and we love you. And Jason's writing, doing duplex with you left and right. So you're certainly a part of the team, and we appreciate you guys coming in today. So you're heading to a few new states, mm-hmm. And we do have a little bit of a reach. So we want to talk to you about the states that you guys are heading into. But first, let's talk about what you're actually doing here in Texas right now.
So in Texas, basically, we're a mortgage banker. We've been in business for 60 plus years. I think it's 67 years. We're the oldest privately held mortgage company in the country.
Really?
So yeah, we're not going anywhere anytime soon. But in Texas specifically,
you're not going to sell solar anytime soon?
No.
Okay. Yeah.
So specifically, we do the permanent financing on any type of investment loan or primary residence or whatever you want to call it. You know, anywhere up to a 4-unit property, which is the guidelines. We also have some additional products out there where we can do some other commercial stuff to get a little bit above that.
Sure.
With the Fannie Mae non-recourse type stuff. But we also have a hard money product as well, where we can get hard money loans done at 7% and 2 points. It's a short-term loan for buy and hold only. I don't use my funds for flips. So it's a very streamlined process. Appraiser touches both sides of the product, so there's really no gaps in value.
Nice.
So that's one of the beauties of the product. Plus, everything is done in-house. My entire team is underwriters, so we know from the get-go whether a buyer is approved or not.
Are they actually here?
Yes.
They're not in like North Dakota or North Carolina?
No, we don't do what they call, or what the government calls, these pods, these processing pods or these underwriting pods where there are third-party people seeing your documentation and whatnot. It's all done in-house. My entire team is in the same building with me. Technology makes it easy to cross the state line, of course.
And they might know a little bit of something about Texas, right?
Oh, yeah.
So,
Definitely.
Nice. Yeah.
And we've been doing business in other states as well for quite a while now. And, you know, when we made some changes to get to a better or a stronger company, you know, we had to downsize a little bit as a team and get.
Donnei, is that spin for we took a hit in the recession and we?
No, not really. It's basically, you know, you have to adjust to the way the market is.
Yeah.
You know, so sometimes, you know, the downsize to grow at the same time for me is what makes sense. So we downsize a little bit when it comes to the amount of territory we were covering, and the team members I had to basically strengthen that team, bring on better team members. And then we're back out in all these states again. So we're starting to ramp up.
And you're not hurting for any deals here in Texas.
No. I'm one of these that likes to grow. We've got Texas perfected.
Yeah, you
now
sure
it's
do.
time to go these other states and perfect it again. And we've been doing this for 20 plus years.
Nice.
So
hey, give me your number so I can give it off.
It's 832
975
1800.
1800. So
yes.
Reach out to my friend.
And we go by Verity Mortgage, which is the business name outside of Louisiana, because that's where the parent company is. It's Eustis Mortgage out of Louisiana. Outside Louisiana, we do all of our business under Verity. And you will also see the Gothard team, which is my team.
Yep.
You know, which is my actual specific group. There's 7 of us in the office.
That's great.
So, just in Houston, just the Houston area last year, we did over 500 to 600 loans.
Nice.
So we're not a small team. Nationally, we did over 4 figures.
What's the dominant type of loan of that 600? What's
the dominant type is the what they call the temp to perm, which is the hard money to help rehab a property and then rolling it into a conventional loan behind it.
Nice.
So that's the dominant loan you see. So on the permanent side of the deal, you know, we don't really see a ton of purchase because most of the properties that people are buying are the rehab properties, especially with the flood and everything back in Harvey days.
Sure.
So, but, you know, we still do a lot of purchases, and we do owner-occupant as well. So, I mean, we're not just a one type of niche group.
So you'll do owner-occup, right? Yeah. Standard Fannie,
Freddie, Ginnie, FHA, VA, Texas Land Board.
Gotcha.
VA land board, so on and so forth.
So tell us where you've been operating so far and then where you're going.
Okay, so basically we're in my team is licensed in 12 states. And real quick, I want to, the company is licensed across the U.S., but as a loan officer, the government requires us to be licensed in each state that we have to get, that we want to do business in. So right now, our strong states are Texas, Tennessee, and Oklahoma. And just recently, we've moved into, again, as a team, we've moved into Missouri, Indiana, New Mexico, and Georgia. Those are the last 4 that we've added. But I do basically the whole South, East U.S.
So do you have the same products available in all the states?
Yes, we can do it all. Now, the hard money product that we're using outside of Texas launches on June 1st.
Okay, great.
Okay? Well, inside of Texas, the product is already here. But the hard money buy and hold product launches on June 1. And it's a low cost, low rate deal, short term to get you in there, get it rehabbed. And it's a product that no one else can match because, most of your private lenders nowadays want skin in the game. So when you go in and do your hard money loan, private money loan, hard money loan, whatever, they're going to loan you 70% ARV or sometimes 75, and they're going to require you to pay something out of pocket to get in, whether it be half your rehab cost or whatever. Well, then they also want you to start your rehab yourself. Well, I'm eliminating that. We're going to loan 100% of whatever it takes to buy.
Wow, that's awesome.
Buy, rehab, and close. And I'm also going to dish out 50% of those funds to start the process.
That's
start
fantastic.
the work. So you basically have the only skin in the game you've got is your appraisal. And we will be doing full appraisals on the front end.
That's amazing.
Yeah. It's a product we had back in 2005 through about 2013, but when all the rules changed and stuff, we kind of backed away from the product. Now we're bringing the product back.
But that really tells you, what the market's like.
Oh, definitely. The
market
is
if there's underwriters and investors and institutional lenders that fund your companies that say, put this money on the street in this type of product.
Exactly.
Yeah, that's a great
we're
sign.
also a little bit better off than most, too, because we have our own funds to use in this market as well. So not all this money is from funding agents or from partners or whatever.
Gotcha.
It's our own funds.
Nice. And then you come across deals yourself, right?
Oh, yeah. I'm an active investor. We've been investing ourselves since about 2000. I've owned approximately, I quit counting at about 400. So I've owned over 400 since 2000.
Nice.
But I'm actively buying now. I'm not just one of those lenders that's out there to make a paycheck off of the business that I do for lending. I'm out there investing, so I know the numbers. I know the process.
Speak our language,
I know,
right?
Exactly. I can speak the lingo. And I'll be the first one to tell you if a deal doesn't work.
Perfect.
But again, it's your file I'm looking at.
Right.
I'm not generalizing it. It doesn't work for you, and it may work for someone else.
Gotcha.
But, every person's different. So.
And so now we're heading off to Missouri, New Mexico, and we're want some work in Georgia.
Yep. I want those 3 states. They'll be my next 3 targeted states where I want to ramp up the business in those locations. So, we'll do business in the 12 states that we're in, but those are 3 I'm going to target this coming year to kind of ramp it up.
That's fantastic.
Increase. Yep.
So, but again, same products available in all those states.
Yep.
Great. And they can reach you, same number they can call you at?
Same number, Yep. And my team can forward you to me if I'm not in the office. I'm not scared to give away my cell phone. Just don't call me after 8 o'clock. And, I'll even answer it when I'm out on the lake or something. Who knows? I've answered phones up in a tree stand before hunting hogs. So it is what it is.
That's doing business here in Texas. Got it. So what kind of advice can we talk about? Because we had a good meetup last night, dozen or so people in a room. 8 of them were doing deals. 4 were, a little intimidated, just trying to figure things out, trying to get things going. Hey, I got a property I don't know what to do with. How do you help someone like that?
Well, basically the first step is helping the buyers out is actually knowing what their particular picture or portrait looks like.
Sure, their credit profile.
Their credit profile, their income profile, whether it be, and again, we're not scared of self-employed borrowers. We do them all day long.
That's fantastic.
I've got buyers that actually qualify to buy that are only receiving pensions and Social Security. So, I mean, we're not scared of any of those other loans. Don't let anyone tell you that because you're self-employed you don't qualify, because that's not it. But once we have that that documentation in front of us, we can see what we can do.
I would think most of those people talk themselves out of it.
They do. A lot of people talk themselves out of it. Yeah. And again, I'm not going to push them to buy something they don't want to buy. I'm not going to push them to get started. But why go through all the steps?
But at least they know the options.
If you're mentally and financially prepared for it, get her done. Let's move on.
And they know their options. They know that I can call Donnei and
every option. Yeah,
get this thing going in 48 hours or faster.
Most definitely.
That's awesome. So, are you buying anything in Galveston? Chris wants to know.
I'm not buying in Galveston.
We're buying in Galveston, Chris. If the numbers work, send us the deal as long as the numbers work.
I'm concentrating right now on the west side of Houston, is where I'm buying like Katy, Brookshire,
nice,
Sealy. I'm staying out there right now because that's where the city's coming. It's coming that direction. So
I agree
right now.
Yeah, for sure. And up to 290 way. Yeah,
exactly.
That's going to be some pretty popular stuff. What's the minimum loan, right? So I get this from a lot of from a lot of loan guys, and they're like, "Hey, we don't want to do less than 75 or 65 or something like that." And to me, what I actually hear is, I don't want to do that amount of work for that little pay.
It don't matter.
Am I hearing it wrong?
The lowest loan amount that we can actually go into or do a loan for that actually either breaks even or we make some money as a company, or we're not here to do stuff for free, is about $48,000.
That's a pretty low floor.
Yeah. So, I mean, we can go down to that as long as the loan amount's there. That's not the sales price. The loan amount. As long as we get a loan amount about 48 or better, we should be fine, and we'll do it.
So that would work in Beaumont almost all day long.
All day long in Beaumont.
There's a lot of folks in Beaumont who struggle. We've got all these great cash flowing deals, but I can't find a hard money lender. I got to come to Quest.
No, as long as your permanent financing loan, again, buy and hold, can be 48 or better, we'll do the loan.
That's awesome.
Yep.
That's amazing. So, and then, how about on the bigger ends?
Bigger ends, your max loan amount right now is $483,100.
Gotcha.
So that's the largest loan amount per Fannie guidelines that they allow on the conventional side. So it's a loan amount's $483,100 or lower, we're in. Once you get to jumbo, you're basically looking at a commercial loan, anything above that.
So, this is a good thing for flippers because we talk about it all the time. And I fell into this trap early on and try and avoid it. What's that FHA number? Is it 329 for Harris County?
368, I believe, is the
368.
Number. Yeah.
So that's first time home buyers, right? That's all the 3.5% down.
And one thing about the FHA, different zip codes have different.
Yeah.
So
even within Harris County? Oh, I didn't know that.
No. I meant zip code. I meant county. Each county has a different.
Right. So Travis County's pretty darn high. That's often.
And then
here's pretty medium.
So each county is different.
So we look at that and we tell flippers, hey, if you're going to do this, that 349 flip is really perfect. They don't last very long. You can get a first-time home buyer in there. Again, 3.5% down. They can have some challenge credit, but it's got to be okay. And I think most of the market sells under that number.
Now, FHA just changed their rules 2 weeks ago. So there's a lot of FHA buyers now that.
What are some of the highlights that?
Like the credit score is 620 now.
Wow.
Before, there wasn't a credit score requirement. Now, that 620 has some variances that you have to go under for certain things. But a lot of your buyers who didn't qualify credit score and debt to income or credit score and, whatever, now that 620 creates a plateau or a lower bottom of where they qualify now. So we were closing loans on FHA at 535, 545, and now you can't because they've tightened it up a little bit.
So I know Jason and I are going to have a conversation on radio this week about the of Fannie and Freddie moving out of receivership from the federal government.
They're trying to go private again. Yes,
they're going to go private, and whether they go as a whole for the nation or break down regionally will be very interesting to see. Yeah.
All we know is that they're moving to that direction to go private once again, like they were back before the last downturn. We just haven't seen any specifics on it yet.
But they back over 50% of the mortgages in this country, right?
Easily. Well, they're also, Fannie and Freddie are also attached to HUD now because HUD was already a government agency.
Sure.
Why not go ahead and just link them all together? So they're all still attached to HUD to a certain way.
Gotcha.
So it all falls under government financing.
Great. And then 1 to 4 units.
Up to a 4-unit property.
Yep.
All day long.
Do you have to live there? Can you get it as a rental?
You can buy it as a rental. You can buy it as an owner occupied too if you want.
Nice.
We've got some buyers. That's what they do. They'll buy a 4-unit property and they'll move into 1 unit and stay in that unit for a year or so, and then turn around and buy another one. I
think that's the best millennial strategy out there.
Yeah. And it is the younger ones that are doing it too.
They don't want big houses. They'll take that 800, 900 square foot apartment. They'll feel like they lived for the last 6 years and move in, but they own the other 3 that pay for the 4th.
They basically pay the entire note.
Yeah, that's such a great strategy. And I think you'll see more and more of that in this marketplace because there's 2s and 3s everywhere. Right? Yeah. Everywhere, and almost Amanda says hi. And there's that's funny, Chris. But there's a big strategy out there of millennials coming into the marketplace now. There's the National Association of Realtors says that, hey, they're going to be buying 25% of the marketplace over the next 3 years. So I think that product is a pretty smart product. How about, did you ever do a 203K loan?
Yes, 203K is the FHA rehab. There's actually 2 versions of it. There's a streamline.
Yep.
And there's a full.
Yep.
So we do them both.
You got a HUD specialist you work with here?
Yeah, we do. I think there's only 2 specialists in Houston anyways.
Oh, really?
That do the FHA full blown inspections and stuff. So Donnei Gothard used to be the one, but she retired, and I don't know who the two new ones are. So.
I love that product.
Yeah,
I think
it's good for owner occupied. Yes, all day long.
I think it's a great product. I think my little thing with investors is, hey, if you call yourself a real estate investor, are you in the middle of a 2-year flip in the house you live in?
Mm-hmm.
Right? Because you can buy with a Fannie, with a Freddie or a Fannie FHA 203K, and it's as good as any 3.5, 5% down. You can actually, I believe, borrow 100% or more of the appraised value if you're doing certain products.
Yep.
And then you have a third party, that FHA specialist, that will help you.
Yeah, they actually design the rehab bid for you. They tell you what it should cost, what they'll allow, and so on. So,
and if you can just hold on to that house for more than 2 years, you avoid any capital gains, and then go roll that capital into another one. Exactly. That's what every investor should be doing until you have that house free and clear.
Yeah.
So, any last words?
No, just give me a buzz, and I can go through the products that best fit your needs and what you're looking for. I did see a question about an Airbnb. That's a question for offline. Just give me a buzz. There's going to be a lot of nuances to that.
For sure there is.
But otherwise, just give me a quick buzz. Typically, my team will just forward you to me if I'm not in the office. I'm here with these guys most of the day today going through some stuff, but give me a shout. Excellent.
Hey, and if you guys know anyone in Missouri or Georgia or New Mexico, you should really go ahead and refer Donnei, because he's got great products for your friends out there that are doing some deals and flipping. And you saw that he's not afraid to play below $75,000. So, Donnei, thanks for coming in.
Not a problem. Good seeing you. Yes, sir.
All good. All right, guys, check us out. Hey, we're on the radio tomorrow morning, 11:10 a.m., 7 to 8 o'clock in the morning. Your drive time, you'll see both Jason and I there. Take care, guys.